minute. Just let everyone log in. Just for housekeeping purposes, this is going to be recorded. This will get sent out to you before end of day, before probably noon tomorrow. And we have all our questions coming through this answer queue. So fire away. We've got the best of the best here today. And everything we're going to do today is from our website. There will be a couple of slides I'll show you that are PowerPoint, but again, it's recorded, and those will be included in the recording. So we're going to cover the second lien seconds. We're going to show you our blended rate calculator, our quick quote, how to send us a pre-qual, and then I think one of the most underutilized tools on our website is our marketing portal. So we're going to really try to show you how to go out and get this business, especially with the second liens. So give it about another 30 seconds. I know our subject matter experts are chomping at the bit. Hope everyone had a great total eclipse if you were in the path. I actually was, so it was actually pretty neat. So, all right, let's get started here. Again, my name is John Gemini, Regional VP of Sales here at Angel Oak Mortgage Solutions. Love to introduce these subject matter experts. I'm going to start with the West Coast and work our way back, time zone wise. So Eric Morganson, please introduce yourself.
Howdy folks, Eric Morganson here to make you guys money.
All right, that's it. Eric, how long? Eric, you've been here longer than me, 10 plus years?
10 years.
All right, great. And then East Coast, who I get to work with every day in, day out, Scott Grubel. Scotty.
Good afternoon, everybody. Scott Grubel here. I'm an account executive down in South Florida in the Broward County area. Been with Angel Oak for 8 years. And yeah, as my colleague Eric said, we are here to help you guys make money today.
Yeah, thanks, Scotty. So again, my name is John Gemini, Regional VP of Sales here at Angel Oak. Guys, we're going to do a poll question here, and we're going to share some intel with you guys. So let's get started. So let's launch the poll question. Who has originated a second lien in the last 12 months? So while you guys are voting, I want to pull up a PowerPoint slide that will kind of show you guys. Scott and Eric, can you see this?
We sure can.
All right. So 40% of the homeowners own their house outright here in the U.S. There's $33 trillion worth of house equity out there, and the average home in the U.S. has appreciated almost 48% since 2019. Throw out a couple other slides here. Eric, you were talking about this earlier. 63% of the people in the U.S. have a mortgage less than 4%, 85% less than 6%. And you can see the debt here. Credit card debt balances are over $1 trillion. Student loan debt over 1.6 trillion. Auto loans at 1.6. And consumers in 2022 paid $120 billion in credit card fees and interest. So let's look at the poll here. Okay, 39% have done a second lien in the last 12 months, but 61% have not. So let's get into this right away here. So Scotty, Eric, you're going to talk about the closed end. No, I'm sorry. Let me back up here. Scott, you're going to talk about the closed end second. Sorry about that.
Yep. So we offer two options with our second liens, the closed end second and the HELOC that Eric is going to talk about. I'm going to go into a little bit more detail about the straight closed end second mortgage. And again, the idea here is to provide you guys with more options to close more loans and make more money. That's why we have two different ways to get these done. Your borrower wants to tap into that equity. Option one would be closed end second mortgage. This one goes up to $750,000 on the high end for your higher loan amounts, and then it goes down to $75,000 on the low end for the minimums. We're offering numerous terms on these. So you can see here, we can go 30-year fixed, 20-year fixed, 15-year fixed, and 10-year fixed on the terms for these second mortgages. It's going to be a cash out or a rate and term, so you are able to pay off liabilities or liens through the closing on the closed end second mortgage, just like you would on a standard cash out refi. We're offering them on owner-occupied properties, second homes, and investments, which makes it a little bit unique. You're not just basically pigeonholed into your primary residences, you have the ability to do this on your second homes and investment properties. Single family homes are okay, townhouses, 2-unit properties, and also warrantable condos can be done here. And the key to not just our closed-end second, but our HELOC, basically all of the second lien programs we offer, is that these are non-QM second liens. What does that mean? That means your borrower can qualify using bank statements for their income. Business bank statements is how we do for these two programs, and that's unique into how we do these as compared to your standard closed-end seconds or HELOCs that most are familiar with out there that are basically going to be full doc only. Really, at the end of the day, for anybody on this call, if you've ever closed a bank statement loan for any borrower after 2020, they are a candidate to possibly qualify for one of these two programs because we know they're sitting on a ton of equity. They're probably sitting on a really low interest rate, below 4% if I was going to bet, and that's what the data shows. But they may want to tap into that equity to pay down some high interest credit, or maybe just pull some cash to do some other things with. So there's huge opportunity for everybody on this call to just take a look back into their book of business and go back and speak to those borrowers and try to help them out. But as I said, you can qualify using either your 12 months or your 24 months of your business bank statements. Same calculation that we do on a standard purchase rate and term cash out bank statement loan. We're going to do the same exact calculation for your closed-end second and for your HELOC. And remember, we do the income calculation for you. All we need you to do is get those statements over to us. So we make it about as easy as you can possibly get, as easy as it could possibly be to get these done. DTIs are going to be 50%. We do have a minimum credit score of 720 for the bank statements, and then 700 if you happen to be using the full doc option, because we do have a lot of borrowers that we've done full doc loans for. These are just missed borrowers, right? They were not able to qualify conventionally either when they took their first mortgage or maybe today for a number of different reasons. So you have the option to go full doc or, again, bank statements if they're self-employed. Minimum credit score, as I mentioned, 700 on the full doc side and then 720 on the bank statement side. What I like about the closed-end second is we're going to treat this basically just like a first mortgage. It's going to be originated the same exact way. We, as the AEs, are going to pre-qualify it and calculate the income for you the same exact way. It's got a fixed term, it's got a fixed payment, and we're going to give the borrower their cash at the closing table, and they can spend it however they see fit if they're not paying anything off at the table. So it's a little bit more cut and dry. Pricing is very good on the second mortgage. You guys can price these out right on our pricing engine online. No credentials are required, and we're going to walk you through how to do that as well.
Yeah. So Tony has a question here, and Tony, we're going to get to this. Tony wants to know if we have marketing materials that he can market. So, Eric's going to cover that marketing portal, and because Eric's so strong on that marketing and great ideas on how to find these borrowers too. So, one other question came in here. We'll get to Eric talking about HELOCs. We'll get to Yvette's question here in a minute. So, Eric, let's talk about the HELOC. Eric, give us some the highlights of the HELOC, the bank statement HELOC.
Yeah, first let me address something regarding HELOCs, you guys. You originators out there, you're probably wondering, how in the world can I make any money on a HELOC when your borrower can simply walk into Chase, Wells Fargo, B of A, certainly credit unions, and get a HELOC for free? So how are you going to make any money on a HELOC? Well, at Angel Oak, we have a way for you to make money on a HELOC, and that is that we're doing these seconds, both closed-end, as Scott mentioned, and HELOCs for borrowers that don't qualify at Chase, Wells Fargo, B of A, credit unions, because we have alternative income solutions for these. And I hope you're sitting down because we're doing cash out, combined loan to value, all the way up to 85%. What? 85% cash out, combined loan to value, you guys. Now, let's talk about the alternative income borrower. They're self-employed. What do self-employed individuals love? I think they love access to capital. Look at all the dead equity in America. What is dead equity? That is equity I have in my house that I have all this equity, but I can't realize that equity unless I, you know, refinance my first, which I don't want to touch that first interest rate for a generation. That's a generational rate that you don't want to disrupt. But now, how do I tap into the equity of my property when I'm writing off so much on my taxes because I'm self-employed and I have all this equity, and boy, would I love to use it for business. Or as you know, John is mentioning, pay down debt at a much higher interest rate.
Yeah.
Well, here's the solution, you guys. Anybody, as Scott mentioned, anybody listening to me right now that has ever done a first mortgage bank statement loan out there, that is the lowest hanging fruit in the market. Reach out to that self-employed borrower and say, hey, would you like some access to the equity in your residential property? Now, we all know we can write off the mortgage tax rate, right? If my interest rate is, let's say, 5%, I'm in a 40% tax bracket, I get to write off 40% of that 5% mortgage, up to $750,000. But what if I take equity out of my residential property and I use it in my business? Guess what percentage of interest rate I get to write off on that? 100%. So, guys, don't lose out on your borrowers that you've done a bank statement loan for and let somebody or your competition slide in and do a second for them. Get to them today because it's low hanging fruit. Now, regarding our HELOCs, how do you make money on these? Angel Oak is going to have your borrower draw a minimum of 80% of what that HELOC is. So let's say it's a, I don't know, $200,000 HELOC. We're going to make the borrower draw $160,000 at closing on that HELOC, and you're paid on basis points, so you're going to get paid on that. Now, we want to see these loans, folks, we want to see them carry for at least a year. They can't get $160,000 today and then pay it off tomorrow. We want to see that carry for at least 90 days. So with that said, we will go up to $500,000 on these. Combined loan to value, what? 85%. And a HELOC, you guys, they're interest only. Now the borrower can pay this down whenever they want, but it is an interest only loan. We have loan terms 15 to 25 years, but you're probably going to want to stretch it out for the most amount of years because, again, they can always opt to have that lower payment or pay a little bit more. And we need business bank statements on these. We do see a lot of these scenarios once we launched this about a month ago, but see a lot of personal bank statements. That might be coming. We have yet to do a securitization on these seconds. So for now, it is only business bank statements. And again, we do have full doc available as well. And we'll do non-owner occupied second mortgage HELOCs. Think about that on investment properties out there. Self-employed folks, you guys, they want access to capital. It's that simple. So, and again, they can use the money however they see fit. We're not imposing anything that they have to pay down debt or whatever. And the DTI is 50 front, 50 back end. We do need a minimum FICO score of a 720 on this program.
So two things happened there, Eric. We just, and you said we haven't securitized these yet, but changes are probably going to come because we just increased that loan amount up from 400,000, right, to 500,000, and we just lowered the credit score from 720. So Travis, we got to update our website to 700. So those are two things that have already happened in the short amount of time that we've had this, so which is great. Got some questions coming in here. Scotty, can we do this for a borrower that is a non-owner occupied? And Eric just hit on that. So Henadina, Scotty, just give her the property types we'll have.
That for the question is, can we do it as an investment property, John? Yes, we absolutely can. We can do these on primaries, second homes, and investment properties.
Right. So, hey, Eric, this goes back to you. Do all borrowers, this kind of comes back to our self-employed borrower, maybe who's also got W-2. Do all borrowers have to have 2 years in the same line of work to qualify?
Okay, so if it's a bank statement loan, yes, you have to have self-employment for at least 2-year runway to qualify for one of these. You can be both a W-2 wage earner and have self-employed income coming in. You can do that for the same borrower.
And I think that was the gist of the question from Henadina again. And then Scotty, Eric's asking, will we do multiple family properties? So how many units will we go up to on our second liens?
I believe we can go up to a duplex, and let me just double check that for Bears.
Don't you get it right, Scotty? You got it.
2 units,
Yeah,
yes.
it's a
We can go up to a duplex on
Yeah.
these.
Yeah, and you know, this is
And
all
condos.
what's that?
And condominiums.
Yeah. So so great questions. Max, I'm going to go to you, Eric. You might have to look at your matrix. Max CLTV on an investment property.
That's going to be, I believe, 80%.
Okay, thank you. And Joey, we're going to get to rates on this. We're going to show you our quick quote tool. Scott mentioned that we'll go through. So keep your questions coming. Scott, what are you seeing from, you know, while some questions still continue to come in, what are you seeing the biggest, I guess, what are people wanting from the, maybe the term that you're closing loans with? And then, I mean, how are these been flying through the system, I guess? Maybe that'd be a good question.
Yeah, in terms of the terms, really, it's going to be all dependent on the borrower. As Eric said, the self-employed borrowers specifically, they want the access to that capital. Some of them are choosing to take it in the lump sum, and others are preferring the credit card style HELOC that they can, you know, withdraw on and pay back and be able to utilize it that way over the period of that time. I've closed a few that were maxed out on the terms to a 25-year, but I also have one right now in process that's at a 15-year. So I think it's really going to all depend on your borrower. And that's the beauty, I think, of these programs, is that you can suit them to your borrower's unique situation. There are so many options in terms of the terms. Obviously, Eric mentioned the interest only option on the HELOC, you know, and just the simple fact that you can go with that HELOC or just take that closed-end second up front. So it's a great conversation piece for all originators on this call to have with their existing client base. I mean, look, the opportunity right now is massive. As we mentioned when we started the call, highest amount of equity ever in the history of this country in properties for homeowners. At the same time, we have the highest amount of credit card debt we have ever seen in this country. And I'm not even going to go into automobile debt, student loans, et cetera, and everything else. Go ahead, Eric.
SBA loans as well. Small Business Administration loans, all-time high.
Exactly. And as Eric said, most of these homeowners are sitting on a generational rate. I love that term, Eric. I'm going to remember that one. It literally is a generational rate. You could have a bank statement borrower that you did a loan for in 2021 or 22, and I remember doing these, where there might be sitting in a 3 to 4% interest rate. They're not going to touch that first mortgage, and I don't blame them, but they want to get their hands on that cash. And this is the perfect way to do it. Those borrowers are going to have these conversations with an originator. The question is it going to be you?
Yeah, Scotty and Eric mentioned, you know, these self-employed borrowers. I'll throw out some more stats about self-employed borrowers that, you know, since 2020, and we all know what happened in 2020, right? It was the largest increase in self-employed borrowers that this country has ever seen. And that has not slowed down. Since 2020, there's been 20 million new business formed. And the highest percentage has been in Florida. And guess what state's number 2, Eric? California. So that's where, you know, most of those businesses are being formed on that West Coast, East Coast. That's happening. Those are real people out there who have amassed this equity in their homes. So some more questions coming in here.
John, I think I answered your question. Your second part of that question was, how long are these loans taking to close? And I'm actually pulling one up as we speak that we just closed. This one went from submission to clear to close in 8 business days. So to give everybody an idea, submission to clear to close, that was a HELOC on the bank statement program, 8 business days.
Yeah, that's pretty impressive. And, you know, once people make that decision to access that equity, they want it quick, right? So we can get that done for them quick. Eric, Kent's asking, on the HELOC, my debts be paid at the closing table?
Uh, when you say debts, is that credit card? Is that a car loan? Is that another second? Yeah, you can write that in, or well, once the loan funds, just stroke a check from your HELOC account.
Yeah. So either way, like you said, Scott, gives them flexibility. As long as it's on the settlement statement, we'll pay it off at title. And if it's not, like Eric says, take the lump sum and pick and choose what you want to pay at that time, you know. Um, all right, guys, we're 20 minutes. Eric, maybe this might be maybe state specific, you know, are we having any insurance problems with the state of California?
Well, that's a deeper conversation.
Okay.
You have, I believe, Allstate pulled out of the state, but State Farm's still here. So there's insurance companies still writing policies. And all the headline news, you guys, they're selling fear. So if you want to talk to me offline, happy to discuss it with you.
Yeah, right. All right. We've got through most of the questions here, and if anyone has them during, we'll stop. We'll ask some more questions. So let's talk about, you know, people have asked about rates. People have asked about, you know, and I brought up we were going to talk about our blended rate calculator, and I already have a blended rate calculator scenario here for us. So it's you can access the blended rate calculator here, right? Blended rate calculator or our debt service coverage ratio loan, which is a very popular loan. But I put in a scenario here already just for the sake of time. And Eric, do you want to talk about the blended rate of the scenario I have here? Because I know you're always really, really talented about talking about, let's not talk about the rate, but we're going to show that here, but let's talk about a payment and how they position themselves better.
Correct. We're in a business, folks, that, yep, we deal with interest rates day in and day out, and it's constantly hitting you in the head, rate, rate, rate. But we never sell rate. We sell payment, we sell solution. Listen, does anybody out there ever write their interest rate on the check when they're about to make their mortgage payment? No, you never write your FICO score or your interest rate on that check, but you certainly write the payment down. So that is the business that we're in. So what this calculation is going to show you is what the blended rate is if you include all the money in the first, all the money in the second, and what it comes down to. Now, again, we're the only country in the world that allows you to write off your mortgage interest rate. Can't do it in Japan, can't do it in Australia, can't do it in Mexico, can't do it in Canada, can't do it anywhere. You can do it here. That interest rate on your owner-occupied property is deductible to whatever tax bracket you're in, as we all know. But again, if I'm self-employed and I'm pulling money out of my property and I'm using that money towards business, I write off 100%. And in this scenario, I'm running 100% of that 10.375 off. So I can either pay federal income tax or I can actually have it go towards me utilizing the capital or the equity in my property. Now, think about this. I can show the IRS that I'm losing $13,000 a year on my taxes and yet turn around and pull $750,000 if I have that in equity in my property out of my property and qualify for that loan. Once again, I can show a loss on my taxes and still have access to all of that dead equity in my property. You guys, we need your help getting the word out that these programs even exist.
Yeah. Yeah, no, Eric, it's you know, sometimes I come across a little frustrated that, you know, we've been doing this for 10 years and trying to educate the marketplace. And now we have a program here that, you know, people thought were dead and gone in their CRM, whatever database they're using. And now they can access this with these programs, Eric. It's truly an opportunity to create your 2024 business plan, right? And it's not too late to pivot on that business plan and really access an entire database of previous customers.
So folks, right now, let's go through a paradigm shift. I want to have everybody understand that you can pivot your attitude towards this marketplace. So we've gone from rate and term refinance. What a wonderful run that was. Now for the next 5 to 7 years, this is a cash out market. Yep, you're going to pop some purchase loans, of course, but that market's off 90%. You're still going to do those, but how do you still go to the bank in the next 5 to 7 years? This is a cash out market. You can get rich on this niche.
100%.
Yeah. And Eric, I was at a large lender's sales rally about 4 or 5 months ago, and they had Barry Habib in there. And Barry Habib said, "Why don't you just pivot to being a debt consultant to your former customers?" And it really, the light went on, and then I think it was like the month later we relaunched our seconds and HELOCs. So it worked out perfect timing. So Scott, a lot of people have been asking about how do I get a great quote, and how do I submit a quick qual, using my internal terms here. How do I submit a pre-qual to Angelo?
We're going to go over that, but before we do,
Sure.
I just want to harp a little bit more on this tool because, again, the idea, as Eric said from the very beginning, is to help you guys make more money. And if you look at this tool, I mean, how easy is this that without credentials, you can come right into our website and you can enter your borrower scenario and instantly show them if they were to tap into their equity through a closed-end second or a HELOC and pull out X amount of dollars, this is what their blended rate would look like, in this case of 5.771, and this is what their total payment. So now you are showing them in dollars how much money you can save them from whatever they are paying today and all of that high interest credit cards or whatever it is that they're paying off. If I'm an originator and I have this tool at my disposal for free, I may start coming in here and running scenarios, go through my LOS, run some scenarios for previous clients I've closed loans for, bank statement loans specifically back in 2020-21, and I might just send an email to that borrower with a snapshot of this exact blended rate calculator. Because when you show it to them and you plant that seed and you show them, here's your exact blended rate, a lot of borrowers might look at these and they're just looking at, as Eric said, they're looking at the rate on the second or the HELOC. They're not seeing what that blends out when you blend it with the first, and they're not seeing what that final payment is going to be when you consolidate that debt. I just wanted to touch base on that because I think this tool is really powerful. And as an originator, if I have this at my disposal, I am going to use it to my advantage.
Yes, Guy, no, it's definitely worth the time that you spent on that, because I think we've got to get people, as Eric mentioned, just have to think a little different, think outside the box, and it's really not that far outside the box. And if you really look at this blended rate, interest credit card debt, the average interest credit card rate is 25%. Mm-hmm. And if you look at this blended rate, Scotty, and I'm glad you stayed on this, is 85% of the households have less than a 6% interest rate. But what is this blended, right? That's still less than 6%. So right. I think that was a great point. Great point, Scott. Thank you.
Well, let's hop over to the pricing engine so we can show you guys how you can price these out. And you'll see when we go through this that you're instantly going to see the options for both programs. So you're going to head over to our non-QM quick quote here. I've mentioned a few times, like to always mention it again, no credentials required to sign in here. So you can hop in here at any point from your phone, laptop, desktop, etc. So the most important thing is that lien position that John just changed. You want to make sure that shows second lien, obviously, for these programs. First lien is going to be your standard purchase, rate and term cash out. Second lien is going to be your HELOCs and closed in seconds. Now, when you're going through this, guys, you may be leaning towards the closed end second, but in order to see full pricing, we are going to ask you to enter something into the HELOC draw box. And you want that to be at least 80% of the total second lien amount that you're asking for. John's entering the credit score. He entered the CLTV in this case of 75%, Florida property. And then for the transaction type, we can enter it as a rate and term or a cash out if we're going to pay anything out. We typically like to put these in as a cash out. And then for your income docs, here's where you're going to select if you're using a business bank statement or a full doc. This one's going to be done, for example purposes, on a primary residence, owner occupied. So you can see on borrower paid compensation, you're looking at, on a closed end second, a 10.375. at this particular 75% LTV requested. Oh, by the way, we can go to a max CLTV of 85%, but your rate at 85, correction, but your rate at 75 LTV is a 10.375 on the closed-end second. On the HELOC, you're at an 11.625 rate at the 75% LTV. So again, here are your options. You can have that conversation with your borrower. If your borrower says, you know what, let's move forward with the closed-end second, you'll click on the View Rates button. You'll select the final rate. The 10.375 you can see here was par. If your borrower did want to buy it down, let's say 999, they can go ahead and pay 3/4 of a point, $1,500 to buy it down. Click Select Option. In the next page, you'll have an option to drag and drop your 3.4 file. If you have it buttoned up, please feel free to do. If you don't, no worries, you can click Next. And in page 3, you'll go ahead and fill out your account executive's information at the top, and then you'll fill in your company information, your name, and MLS ID, contact, etc.
Sorry, Scotty, I was looking for Eric, but he's with
Good. And then here at the bottom, in these boxes, you can drop your file. So you can drag and drop your 1003, your credit. A little bit further down, you can drag and drop all at once, 24 months of bank statements. They'll plop right in there, and then continue scrolling down to the bottom. Well, you'll answer 3 questions regarding the borrower's credit history, and then you'll submit this pre-approval to us. So once you hit the submit button, what happens is the account executives gets an instant email notification that this pre-approval has been submitted for review. I, as an account executive, will take the file, submit the bank statements over to our bank statement review team to begin giving us an official income calculation. And then I'll start reviewing the credit report and the 1003. Usually within 24 hours, your account executive will send you back what we consider our findings, our pre-approval. It's our version of an approved eligible. And you'll see right at the top all of the terms of the loan that the loan's been approved on. It'll say approved eligible right at the top, and it'll show you all of the pricing options that we just saw on the previous screen. Once you have that in hand, you are ready to register that loan, request disclosures with us, and get the file submitted to underwriting. It's that simple.
Yeah, Scotty, great. And like I said, this is, using quick quote, like you said, don't need credentials. And we have an account executive on the west coast of Florida, says his 8-year-old daughter uses it to run scenarios. So, it's kind of easy, an 8-year-old could do it. So really, and it's available 24/7. So Eric, let's talk about, the marketing. Everyone wants to know how to find these borrowers or who these borrowers are, and how do I use the content that Angel Oak has invested in to market these.
So yeah, when we say you don't need credentials, you don't need a password, you don't need a username. It's all open architect. And we also have step-by-step tutorial videos to walk you through any aspect of doing a loan here at Angel Oak. We've really made it really simple. Not to mention, folks, we're not really in the mortgage business here. We're in the service business. That's the fun part of this. So contact your Angel Oak account executive and let us absolutely provide stellar service for you, walk you through this process. It's really simple. Okay, so now where are these borrowers? Walk out your front door after this, and you're probably going to trip over one. There are self-employed people everywhere. If anybody goes to a Subway, guess what? That's a franchisee owns that Subway. From a dry cleaner to, I don't know, in Southern California, everybody gets their car washed. So somebody that owns a car wash, restaurant. Listen, self-employed people are everywhere. Not to mention, make sure after this call you go to every bank statement borrower you've ever even spoken to. Maybe you didn't fund the loan with them. Contact them and let them know that they can now access some of that debt equity and use it for their business. So to get to our marketing, you do need now to log in. Contact Angel Oak. We'll give you credentials to log into our marketing portal. Here is the portal right there. John's going to go to marketing portal right there. We're going to take you to, first, let's just go to presentations. So realtors love selling houses and love getting listings. Well, a lot of borrowers out there have a ton of equity they could use for a down payment to buy more investment real estate. So letting realtors know that you have access to these cash out seconds is a nice start. We have realtor presentations, PowerPoint already drafted for you. And all of this is known as white label, meaning it doesn't say Angel Oak. You would put your own branding on these. And again, I implore you to get in touch with your Angel Oak account executive, and we'll even go and co-present to realtor offices with you. So we
Hey,
already
Eric,
have, go
sorry
ahead, Joe.
to interrupt. So what I did is I brought up, this is one of actually Scott's um, customers, actually. And this is how they customized. And I want to show people how, and Scott, you might want to jump in here on this one, how they customized and what they did on that presentation, Eric. And we'll jump back to you where your thought was going there. Sorry.
Yep. So this is one of my clients, Premier Lending Corp. We've done this for a good handful of my clients, and you download the PowerPoint presentation, the Realtors on Tap Market, and as Eric mentioned, you can 100% customize this. So when you download it, you'll notice that this entire PowerPoint is usually in blue colors. These guys have customized it to their color scheme. They've slapped their logo on every single slide on this PowerPoint presentation, and they even edited the data that's in it. So in this case, they wanted to lead in with non-QM as a way to really attract and get a lot of realtors in a room. That was the basis of their presentation, and it worked. Every single time they use this and they advertise this, we usually get 15, 20, 30 realtors in a room. But they've also added some of the products and programs that they're able to offer conventionally or through maybe some of their other lenders. So it's customizable to however you guys want it to look. But what a way to be able to present to a room full of realtors or referral sources, anybody for that matter, having a professional, well put together PowerPoint deck. And really the work was all done for them. All they had to come in here was do the customization. As Eric mentioned, it's fully white labeled. And now what they've done is shared this with every loan originator in their office. And those guys are all going out and setting up these presentations. And I come on with them to do them.
Yeah. So Eric, how many of these have you done, Eric?
Oh my gosh, John, over the last 10 years, I don't know, maybe 50. And each time I do them, you get in front of a room of realtor guys, whether it be a first or a second bank statement loan mortgage, one or two of these realtors invariably are going to come up to you after the presentation and want a loan for themselves. It's probably the highest demographic as far as job is that of realtors doing a lot of bank statement loans. Think about it. Their broker of record pays them into their personal checking account and they want to buy investment properties. So realtors love bank statement loans.
They just, some of them just don't know they exist. And that's the beauty of it. So you get 12 or more in a room, and I'll promise you, you'll get one of their loans. It's inevitable. Whether we like it or not, they pre-screen your buyers, right, or borrowers, and they do not know about it. I was at an industry event. It was a certified financial planner, and she was also an originator, and had never heard about a bank statement loan for a self-employed borrower.
So John, let's go to that marketing portal, do the drop down, and I just want to mention a few more things. How we doing on time? We're doing
we're fine
pretty
on time.
good. Okay, so whiteboard. We have whiteboard videos that, again, white label, don't say Angel Oak anywhere on them, that literally explain these programs. So as you can see, we have a library of these for you guys. Listen, the more you get the word out that these programs exist, the more digits you're going to add to your personal checking account, folks. So go back to marketing portal if you don't mind, John, and social media. Now, we actually made it simple on social media. You can see we have different fonts, but we've already started a social media message, whether it be the asset qualifier, bank statement loans, a debt service coverage ratio type loan program, full doc. By the way, at Angel Oak, we have niches inside of niches. Like if it's a full doc loan, guys, we're just going to use the FICO score of the primary wage earner. not the co-borrower's FICO score. And that in itself saves loans. But as you can see, we've already have these templates that you can just add to and post every week a different type of non-agency program out there. We have an entire library. Again, reach out to your Angel Oak account executive. We'll walk you through this. John, if you don't mind going back to the portal listing and going to one of my favorite right here is flyers. Folks, again, helping us get the word out that these programs exist is how it all starts. Now, who sitting here right now with all of us has a database full of self-employed borrowers who have yet that are currently renting a house? Who has such a database? A CPA.
Yeah, okay.
CPAs. They're sitting on a database of people that are making a ton of money right now, but are currently renting because they believe they don't qualify for a loan. Getting the word out to CPAs, oh my gosh, can you imagine having 1, 2, 3, maybe 5 good CPAs referring their wealthy self-employed clients to you for their luxury residential purchases? Just saying. So now here we have this Guild Mortgage right now is the branding on this. You can put their picture on it. You guys, will show you how to customize these. And once you do, you'll see up in the upper left that contact information. John, let's go into select flyer and do me a favor and go to the CPA.
Yes, sir.
So once you've put your information right there to the left, all of these flyers automatically populate. It makes it very efficient to literally pull down all of this information, you guys. Again, it's going to pay unbelievable dividends for you guys to get the word out that these programs exist.
Yeah, Eric, I think the beautiful thing, everyone's going to their accountant probably if they haven't been there yet. And, you know, why not ask them for their database, Eric? I think we've done it all for you on those social media. I don't know if anyone realized that we have them dedicated to realtors and to borrowers. So we've done the hard, heavy lifting for you. It's just for you to do a simple copy and paste. So.
Well, truth be told, this time of year, guys, don't even attempt to get in front of a CPA right now. Wait until after the 15th. Honestly, I would wait till the end of this month while the dust is settling for these people, because they're working long hours right now catching up. But again, they have just completed doing taxes for all these self-employed people. And sure enough, they're probably their favorite tax deduction. Ask any CPA, what's your favorite tax deduction? It's the mortgage tax deduction in this country. And they hate it when their clients are making a lot of money and renting.
Yeah, I think, Eric, you know, we talked about it first in this marketing portal is that presentation. I always consider it one of the most powerful presentations because you're educating your referral source. And and as Eric mentioned, I think Scott even mentioned it, if you're not comfortable delivering that content, Eric, Scott, or any of our other great account executives across the country will do it on your behalf, whether it's in person, on a Zoom, or whatever. They will present for you. So, Scotty, anything else in closing or anything else regarding the marketing portal?
I would. In closing, I'd kind of like to just summarize. And, you know, we've shown you the 2 different options we offer for second liens. We've shown you the tools that we offer from the DSCR calculator to help you paint the picture for your borrower on exactly how it makes sense for them. We've shown you how to price them, submit them, and more importantly, how to market them. Guys, there's a reason why, if you look right now, every single industry publication and every major analyst in the mortgage space are all pointing towards second mortgages and HELOCs as being one of the biggest volume driving products over the next 2 to 3 years. Pricing rates we know is going to gradually start to come down, but the data is the data. It's facts. We cannot deny it. Highest amount of equity in the history of this country, highest amount of credit card debt in the history of this country, not to mention all the other debts, and at the same time, most amount of borrowers sitting on generational rates that we've ever seen. The stage has been set. Those that pivot and begin to take advantage of these products today are going to capitalize the most in the next year or two and win and earn a lot of money doing it. The best part about it is you're speaking to a warm lead. 90% of these initially are going to be your past book of clients. These are people that know you, like you, you've put in a good situation before. It's an easy phone call to make. It's an easy email to send out. And guess what? What are those people going to do when you're able to help them out and tap into their equity, didn't have to touch their first mortgage, pulled out a bunch of cash, put them in a better situation? They're going to probably tell their friends and everybody they know, and that's going to generate some referral business for you. It's a no-brainer. It's just a matter of who's going to act, like anything else, right? Who's going to act first? But the data is there. These are factual evidence that none of us here can argue with. So the opportunity is huge, and we're here to help you take advantage of it.
No. Eric, anything else?
Folks, your borrowers out there are going to be marketed to by your competition if you don't do it first. There is an enormous underserved marketplace out there right now. As Scott Grubel said, who's going to act?
No. It's very well said. Just so everyone knows, we want to thank you for your time, especially Eric, Scott. I know you guys are crazy busy taking the time to help, spread the word. It's always appreciated, and I appreciate both of you. For those of you, there was a couple of people on here that already have a couple of HELOCs in the hopper with us, so thank you. For those who haven't given us a shot, please do. You can see the quality and the talent of the people we have that will lead you through this process. So this is being recorded. This will be sent out before end of day tomorrow. We are doing, I believe it's another webinar on the 16th. We'll put this out to you. I don't know if I had that date, so I apologize for that. Again, this is recorded. We will get this out before end of day tomorrow. And just want to thank everyone for taking the time out and let us help you guys grow your business. Everyone,
Thank you, John. Thank you, Scott.
Thank you, John. Thank you, Eric.
Thank you, guys. Appreciate you.